Shaun, Wellington-Altus was founded in 2017. Since then, you've risen to around $40 billion in assets. How'd you scale up so quickly?
We're very fortunate. I'm part of a founding group that we're part of another business that we did this before and sold to the National Bank of Canada in 2011. So the way we liken it is, right set of folks in the right industry at the right time, in the right place, and it's all coming together. Very simple for me to say. Trust me, it's not easy to do.
Well, there's a lot of competition out there. How do you differentiate yourselves from the rest of the market? And then we'll talk about the differences between the U.S. and the Canadian market.
Sure. Well, what we tell folks when they join us is, we put an inordinate amount of time and capital towards our digital footprint. And what we tell advisors is, look, you're going to join us for a bunch of cool stuff and it's going to save you time and you're going to enjoy working here. You're not going to remember us for that. You're going to remember us for how we made you feel. And, in an elevator with, a 10-second value proposition pitch, we love you like you love your clients. And that's what you're going to remember us by.
Can you comment on the differences between the Canadian market and the U.S. market for financial advisory practices?
There's not a lot of difference. Like a great advisor team is going to be the same in America as it is in Canada. There's different regulatory rules that are similar but a little different, but those differences have big impacts. I think the things that you're finding pervasive in the United States are the exact same things in Canada.
And how is the Canadian market evolving? We see what's going on in the U.S. with private equity snapping up RIAs all over the market. It's a very hot market. What about in Canada?
The Canadian market's about 9.5% of the American market. I think you're seeing the same winds of similarity as far as what's happening in Canada. There's less things to buy and amalgamate in Canada. I would tell you, Greg, that we're probably 10 years behind the American market as far as the aggregation in the RIA space that we're seeing down here. But I think that's starting to pick up in Canada.
And you're selling about 30% of yourself or something to that effect. How is that sale going?
We're in the midst of the process. It's very gratifying to know that some of the smartest owners in the world look at our business the way we've always looked at it since day one. We're dealing with a lot of great folks that have a long-term lens like we do. And we're looking forward to seeing how this all manifests in the next couple of months.
And then finally, once you receive that infusion of cash, what are you going to do with it?
Well, we want to reward our shareholders that took a chance on us in the early years when there was more risk on our model. We want to validate our enterprise valuation on the street up in Canada, which this is going to do. And we also want to surround ourselves with partners that have done this before and continue to do this in the United States that allow us to broaden our skill set and become even more parabolic in our top line growth.
All right. Well, thanks a lot for coming on and talking about it.
Thank you, Greg.